Hello everyone, welcome to my YouTube channel. This is just FS right here. In today's video, I'm going to be showing you guys my strategy, how I trade the forex market. I'm going to be listing out my criteria, the things I look for before I consider a trade, and also what I do before I actually enter that trade. So basically what I trade is simple market structure. I try as much as possible to look for the market that is very obvious. So it's clear to me that either the market is moving up or it's moving down or it's moving sideways. And basically I only want to trade when the market is trending. So I did a little example here, illustration here. When the market is moving up, it's always making higher highs and higher low. When it's moving down, it's always making lower lows and lower high. But the way it does it might differs, may not always be the same. But basically, things I apply before entering a trade is support or resistance, counter trend line, Fibonacci, and standard trend line. So this is what I mean by standard trend line. Counter trend line is the one I expect the market to come and break before I enter the trade. So basically, we're going to go to the chart and I'm going to show you guys what I mean, guys, what I'm talking about. So let me just get rid of it 1 minute. So basically, as you can see, this market currently is moving down, but at a point the market was moving up, because clearly we can see that the market was making higher highs and higher lows, higher highs, higher lows, higher high, higher low, higher high, higher low, made a higher high, made a higher low, but couldn't make a higher high, made an equal high, which was a massive double top, and broke below structure. And from there the market made a lower low, made a lower high, made a lower low, made a lower high. Now it has made a lower low. So basically what I look forward is when the market has given me a confirmation that it's either moving up or moving down. So I try as much as possible to come and catch the higher low or the lower high. So for a market that is moving up, for this for example, I try as much as possible to be disciplined, guys, and take only the market that meets my criteria. So basically what I apply, as I mentioned earlier, is I apply the support or the resistance, I apply the trend line, which is 2, I apply the Fibonacci retracement 2, which is 3, and finally to enter the market I apply the counter trend line, which is a very important tool in this strategy, guys. So basically, let's take this swing down for example, is this last swing down. So when this market broke structure down, what we saw was the market that started making lower lows and lower high, but at our first swing, what we saw that the market made a retracement, but it was not up to our 50 retracement zone. So basically, the only zone I like taking the Fibonacci retracement to is the 50, 61, and 78 retracement. So when the market broke down, I didn't get a trade here, so I let go. So what I did is, at the next swing when market broke a support, which now becomes a resistance, what I did was also to bring up my Fibonacci retracement tool and allow the market to retrace back into one of my zone. So getting these two confirmation, what I did was to apply the trend line and see what exactly and see if I can get a third confirmation, of which I did. I got a third confirmation, which is third touch of trend line. So now on getting this 3 confirmation, now the last confirmation, which I think is very important, is coming down, scaling down, and trying to find our entries. So it's now time for me to apply the counter trend line. So what I do is I use the 15 minutes and the 5 minutes to plot my counter trend line. So counter trend line, so this is the first and obvious trend line I can see within the counter trend line. Then at the push up that came back to the 50 retracement zone, I'm just going to use Let me use this to mark it out so we can get rid of the Fibonacci retracement too, so that the chart can be a little bit clearer. Okay, so what I did, what I like doing is at the impulse leg that moved back to the retracement zone. What I like doing is I like plotting also a counter trend line on it, so I can get an early entry, but also I want to get an entry that is also safe. So I plot my counter trend line, this also. Then waiting for the market to come and break this before we enter the market. We target the 0.27. We target the 0.27 retracement zone. We're just going to go back to the 2 hours time frame. I prefer using the 2 hours time frame than the 4 hours time frame, because the 2 hours time frame shows me the structure clearer. Personally, for me, it shows me the structure clearer than the 4 hours time frame. But if you are comfortable with the 4 hours time frame, no problem, the same rules apply, and the counter trend line also works. Yeah, so this is okay. Going back, so either target the minus 61 retracement zone, or you target the minus 27 retracement zone. As simple as this, guys. So what I look forward to, a market that has retraced back to a Fibonacci retracement zone, and also I look for a support and resistance in that zone, and that's two. And I also look forward to applying the simple trend line to also in that zone. If the simple trend line does not tally, I can go with the support and resistance, and also the Fibonacci retracement too. I can use those two criteria to consider the trade before scaling down to 15 minutes to plot my counter trade line and waiting for the market to break the counter trade line. So at the break of the counter trade line on the 15 minutes is where I enter the trade. So at the break of this is where you are expected to enter the trade. So you can also wait for to have more confirmation. You can wait for the market to come and break the outturn counter trend line, of which it may not give you a very high risk to reward ratio, guys. So doing this, it's just a one-to-one. So the best for me is scaling down to the 15 minutes and taking the trade from there at the break of it. Okay, yeah. So here is it, guys. So this is it. And okay, let's consider another example. This trade right here. This was also a nice trade, but it didn't quite hit our target because our target was kind of far away. So the same rules applied. Market broke a structural high. In this case, this market is making higher highs and higher low. So what we did is, when the retracement started, we came down, brought out our Fibonacci, put it there, and looked for the support level in that zone, which was actually here, as you can see. And also, now with this two confirmation, what you need to do is to scale down to the 15 minutes. So scale down to the 15 minutes, and from there you plot your counter trend line. You can have more than one counter trend line, which you are expecting the market to break before you enter, of which you can have entry 1 and entry 2. But I prefer to just enter one. So at the break of this counter trend line, you enter your first trade. Your target is you can target the minus 27, or you target the minus 61 retracement zone, profit taking zone. Then you take your entry. So of which your stop loss should come behind the market structure. So you target where you want to target. First one was a 1 to 6 trade. Second entry was a 1 to 3 trade, of which the market never got to the minus 61. But if you have if your take profit would have been at the minus 27 retracement zone, in this case your profit would have been hit. But for me personally, I prefer targeting the minus 61, and when the market gets to the minus 27 retracement and zone, the first profit taking period, what I do is I move my stop to the last structure that moved the market to that minus 27 retracement, in which case my stop loss would have come behind this market structure right here. So this year my stop loss would have been. And mind you, after entering the trade, what I do is I go back to my 2 hours to start monitoring my trade right there. I can even scale up to the 4 hours to monitor the trade. But I don't stay the 15 minutes and start looking at my charts. And that's the whole purpose of trading the higher time frame for me, so I can have time to do other things. So guys, let's move to other pairs. This is pound JPY. So it has been moving sideways for a while. So all what I did was just to leave it alone, guys. So when I see a market that is not moving up, or it's not clearly moving up, or it's not clearly moving down, what I do is I just leave it alone and move to other pairs. So this market at the point was moving up. We then it came to break a market structure down, and we broke a market structure down. As at this the sentiment has changed bearish. So what you do is at the beginning of the retracement, when the market starts retracing, what you do is you bring out your Fibonacci and you plot your Fibonacci on the chart and wait for the market to pull back into your Fibonacci retracement zone. Then you also combine your Fibonacci retracement zone with the net available support and resistance. In this case, this was the resistance, and also um, this was a resistance. So as you can see, this resistance does not really tally with a Fibonacci retracement zone. That's why I prefer to go. I prefer to go with this resistance that is up here. So what market did was, market came in, tapped into the resistance, also tapped into the Fibonacci retracement to zone, which is the 0.61 retracement zone. And then on getting these two criteria, what you do is you move down to your 15 minutes. You move down to your 15 minutes and you plot your sorry guys, you plot your counter trend line. So as for this would have been your major counter trend line. This would have been your major counter trend line, and when the market broke it, you would have entered at this point, the stop loss above. This would have given you a break-even trade, because I depend on what your rules is. Mine is personally is when the market move 1 to 1 in my direction, or 1 to 1.5, depending on how the structure is, I tend to break even. So on breaking even in this market comes back to hit my break even. What I'll just simply do is to adjust my counter trend line to this level. So waiting for the market to come and break it, and once the market break it, I take my second entry. Target my minus 61 retracement zone, of which this time would have hit a take profit, and risk to reward would have been 4 to 1, making 4 times our risk. So guys, it's quite for me, it's less stressful mentally, and it gives me time to do other things. Yeah, so each of these candles is a 2 hours candle. So I have that some of this setup can take 2 to 3 days before they form. This is a trade that they took currently, and so I'm just simply going to explain how I took this trade. As you can see, a market that is moving down, we broke the structure down, made a lower low, made a lower high, made a lower low. Okay, broke a trend line. For me, the break of a trend line is a reversal pattern for me, and we see a market that is making, so market breaking it and coming to to make an equal high. What I anticipated was a market that will come back and make a higher low to put up a higher high. And mind you, there's a support here. So at market retracing, what I did was to bring out my Fibonacci retracement to plot my Fibonacci retracement to which also tally with this support. And as you can see, it looks as though the market is making a head and an inverse head and shoulder pattern. Look as though the market is making an inverse head and shoulder pattern, guys. So look at the market making an inverse head and shoulder pattern. So with these two criteria, this resistance now turn support and my Fibonacci retracement zone, the market moving to my Fibonacci retracement. So what I did was scale down to the 15 minutes time frame, plot my kata trend line, and also plot the inner kata. Then you can go to the 5 minutes to get the swings very well, but I don't take trade on 5 minutes. Just get the swing and go back to my 15 minutes. And a break of it was when I entered the trade. So you see, expecting the market to move higher, and you see positive on this trade, expecting it to move higher, guys. So this is it. Basically, what I look forward to market to pull back to my Fibonacci retracement zone, a support or a resistance within that zone. Then I scale down to my 15 minutes to look for the kata trade line, plot it properly. If you don't get the swings, you can always go down to the 5 minutes to get the swing on the 15 minutes time frame. So guys, that's it on this video. If you find the video helpful, be sure to leave me a comment. Please subscribe to my channel so you help the channel grow. See you in next video, guys.